All right, our next guest is more optimistic than many about the European debt crisis, maybe more optimistic than Gary Schilling, for example. He says the real problem is that people buying European government bonds just aren't used to taking risks. Mark Dow is a former economist at the U.S. Treasury Department and the International Monetary Fund. Now he's a portfolio manager at Pharo Management, and we love to have him on to talk about all things Europe. And, you know, it's interesting, we just had Gary Schilling on, and he said one of the main concerns in Europe is that the austerity measures they're putting into place, cutting spending, boosting taxes, could end up in creating no growth or even negative growth, and then they don't end up reducing their deficits at all. Is that a concern?
Yes, it's definitely a concern. I want to temper a little bit the introduction by saying I'm not bullish on Europe per se, as much as I am on the systemic risk over the next 6 to 9 months. I think that the package that the Europeans trotted out about a month ago will work to stave off systemic crisis for that period of time. Over that
6 to 9 months.
Yeah, but that's enough time, if done right, for the countries to regain some degree, rebuild some degree of confidence in their fiscal, on the fiscal side. That's really what they have to do. They don't have to come to the market over that period of time. They have their financing. They have to get onto their reforms and build some credibility. And at the same time, the Europeans have to make sure that there's a firewall around Greece.
And that's what it's really about at this point, Mark, right? Restoring that credibility, regaining investor confidence, and then that gives them the time to really do all those measures that are going to take a while to put into place.
That's exactly right. And growth is not going to be good. So there are two paths for growth. There's the bad path if they handle their policies well, right. And then there's the really bad path if for some reason things don't go well and we do get systemic risk.
Do they understand they can't take the bad path at this point? Do they understand that?
I think so. It took them a while to get around to that, to have the near-death experience, but once they did, I think they're on it. And you can see that, you know, Spain passed by decree a labor reform, and maybe some people would like to see more, but they've done something. They've passed a budget law. Italy, Greece, they've all passed things, so they're working on it. And over time, they're going to have to keep hammering away and communicating to us that they have to do the right thing and make sure they communicate it to us so that we know. Otherwise, we're not going to believe it.
Can we, in the meantime, see restructuring? Can we, in the meantime, see it from both the public debt that we're seeing in Greece and the privates that Gary was talking about in Spain?
I don't think we're going to see restructuring in Greece for some time. There's no need to do it, because if you were to do it now, I think it would raise concern about who's next. The way the markets work sometimes is very simple. If we see a problem, we say, who looks like them? And the idea, part of the strategy here, is to buy some time, do some homework, earn some credibility so that when they have to restructure Greece, which I think will be the case, 18 months down the road, 12 months down the road, 24 months down the road, there will have been enough fiscal credibility built in the other countries for us in the market not to worry too much about contagion.
Let me ask you about something that was kind of floating out in the market today. A report that Spain was seeking a $307 billion credit line. It wasn't confirmed or anything, but it was out there. I mean, is that something that you expect to happen?
I think a lot of us expect to see something along those lines. Whether they need it or not doesn't really matter. It's important that we know it's there. At this stage. So we've heard murmurings about it, and usually when you hear them, something is coming. But as long as Spain does the right thing and the financing is there, they have the time, and they have the time to demonstrate to us that they're serious. The ball is in their court, but at least they're in control of the game, which wasn't the case a month or two ago. The markets were in control.
But the problem in Spain really is one of perception, even more so than for Greece, right? Because Greece has its financing needs taken care of. It doesn't need to go to the market for 6 to 9 months, as you say. Meanwhile, Spain, the banks have exposure that they're really hurting if the prices of these assets drop, right? So if the perception goes bad, they could need to restructure or refinance.
Well, recapitalize would be the case in the banks. I don't know what kind of condition they're in. The Spaniards were clear in coming out today by saying they're going to announce the results of their stress test to regain confidence, right? Much like we did here in the U.S. One of the things that Secretary Geithner was encouraging in Europe. That will be good, because in the absence of information, we in markets assume the worst. But there's another problem in Europe, I think, that is sending a bit of a wrong signal to markets. There's a discontinuous demand function for the bonds. That is to say, most guys who traffic in government bonds in Europe abstract from credit risk, or at least they have. They know duration, they know convexity. It's basically interest rate risk. But now, when those bonds get below 88 cents on the dollar, 85, or somewhere in that neighborhood, they say, I didn't sign up for this. I don't want this. This is credit risk. And guys like me, or opportunistic guys who might want to step in, we're not going to step in until we see a 60 handle or a low 70 handle. And in that space, the bonds will continue to sell off every single day. And as spreads go wider, us in the market, we take our signal from the widening spreads, and that makes us more bearish than might otherwise be the case.
All right, Mark Dow, thank you so much.